Hi and welcome back. My name is Nicole Cavender with Arrow Benefits Consulting, and today we are continuing on our series talking about open enrollment and all of the fun things that we have to go through as we make decisions. Today we're going to talk about tax-advantaged plans and the fact that you may have one or more than one available to you to pick from. So when we start talking about tax-advantaged programs, you likely have one or three of them that are available to you. A health savings account, referred to as an HSA, a health reimbursement account, or HRA, or a flexible spending account. Now, each of these operate a little differently, but identifying which plan is available to you will also help inform your decision. Each of the accounts are going to require that you spend money on certain expenses. So identifying what qualifies your expenses in these accounts is important. Identifying who owns these accounts is also important. When we talked about the HSA, it is the only plan that is owned by you as the employee. So when you leave your employment, that money belongs to you and you can take it with you. The flexible spending account and the health reimbursement account are owned by your employer. So identifying and understanding all of the rules associated with the operation of those reimbursement accounts is going to be very important to you. Make sure that you have all of the information in front of you, and if you have questions, reach out to me so we can go over those. When you spend those expenses, how are you going to substantiate those claims? Some vendors will actually make you fill out a paper form and return it. Now, we're getting much more technologically advanced these days, so you might also have a card that's smart and knows when you spend the money on that card whether or not it's an eligible expense, meaning allowed to be reimbursed. Understanding how this works and how to get your money from these accounts is very important. Are the accounts providing you any value? Oftentimes, when we hear tax advantaged, we assume that that's providing us a lot of value. But if we're only putting away a little bit of money and it's costing us to buy up to that plan, we may want to consider whether or not this is really of value to you. Are you trying to maximize and put all your money that you can in there? Maybe that's going to help you reduce yourself into a different tax bracket. But if not, these are questions you should really be asking yourself. Is this arrangement really going to work for me? Oftentimes there's an expense or a reason that you would enroll in these when you're looking at your health plans. Maybe there's a contribution made to it by your employer. The other question I would say when you're putting the money into these accounts is, can you afford that? Sometimes people have eyes bigger than their stomach, and the same can happen when you're looking at tax advantaged accounts and you want to put as much as you possibly can in there. But at the end of the day, you've made it so that your paycheck is all being deposited into these advantaged accounts. That just doesn't make sense for your budget. You need some of that money for regular day-to-day expenses. So being mindful of how much money you're actually allocating to these accounts is very important, as trying to take money out, if it's not substantiated properly with those expenses that we talked about, could cost you a lot of money in penalties. So if you found this informational and helpful and would like to work with us, you can obviously find our details in the description below and visit us at www.arrowbenefitsconsulting.com. And certainly make sure you subscribe and hit the little bell so that you get notifications when new content comes out. We look forward to seeing you soon.